The governor of Florida is currently facing a significant and unfolding crisis. The state's housing issues have become common knowledge. After a period of intense market activity in 2022, characterized by soaring prices and bidding wars that captured national attention, the sentiment began to change around 2024. What is occurring now is more than a simple market correction. Florida's condominium market is undergoing a rapid and severe downturn. This is not a minor slowdown. In numerous locations, the magnitude of the price reduction is already on par with the 2008 crash, and current trends indicate the situation could deteriorate further. Beyond the polished media reports, a more troubling narrative is unfolding, centered on Governor DeSantis witnessing his touted economic success transform into an unforeseen political disaster. The reality of the situation is not being adequately reported. Consider the case of Punta Gorda. Official statistics show that the median condo price has decreased by 26% since its high point in August 2022. This is a substantial drop, nearly equivalent in percentage terms to the nationwide crash of 2008. Some dismiss this by noting that prices remain above their pre-2020 levels. While factually correct, this perspective is fundamentally deceptive. The rate of the decline is critical. Over the past year, condo values in Florida have dropped by nearly 15%. Should this trend persist, prices are projected to fall below their pre-2020 benchmarks within the next year and a half. However, this only hints at the problem, as substantial evidence suggests the downturn is more severe than official figures indicate. Individual examples reveal the true market conditions. A large number of condos with significant price reductions remain unsold, lingering on the market for months without any transactions. For instance, in one neighborhood, a condo previously valued at $711,000 has a counterpart down the street that was listed for $450,000 last summer, which failed to attract a buyer. The estimated value has since fallen to $430,000, marking a 40% decline from the peak, and the actual market value may be even lower as no properties are selling. These units are not being traded. They are stagnant, withdrawn from the market, or otherwise in a state of paralysis, proving that official data fails to capture the true depth of this market collapse. The few condominium sales that are actually closing highlight the extent of the financial damage. In one remarkable case, a standard two-bedroom, two-bathroom condo from the 1980s, which sold for $122,000 in 2002 and was valued at approximately $320,000 in early 2022, recently sold for just $127,000. This represents a 58% collapse from its peak valuation, essentially selling for its price from nearly a quarter century ago and wiping out 25 years of appreciation in a single transaction. This is not an isolated incident. A search of recent sales in Punta Gorda reveals similar patterns. Another unit, valued at nearly $400,000 in early 2023, just sold for $180,000, a 55% decrease. It was initially listed at $342,000 in April, indicating sellers are slow to accept the new market reality and required 3 major price cuts before it finally sold. Expanding the view beyond Punta Gorda reveals a statewide issue. Condo prices are declining in 92% of the Florida markets that are tracked. This isn't a correction. It's a systemic failure. Punta Gorda also leads in year-over-year declines at 11.4%, followed by Northport, 8.9%, and Tampa, 7.9%. Even the robust Miami market has seen a 3.4% dip in condo values. Single-family homes have fared slightly better, though prices are still falling in 66% of tracked markets, with Punta Gorda, Cape Coral, Northport, and Naples all showing declines. This demonstrates a widespread deterioration across Florida's entire real estate sector. A particularly alarming statistic from April 2025 showed 221 homes listed for sale in Florida, an 18.5% increase from the previous year. The inventory supply for single-family homes was at 5.6 months, while for condos it was at 10 months. A supply of over 6 months is considered a buyer's market. A 10-month supply signifies a market under extreme distress. By June, the condo inventory had climbed to 10.1 months. Specifically in Punta Gorda, the supply is 8.3 months for single-family homes and 12.7 months for condos. The statewide median price for single-family homes in March 2025 was $409,500, a 1.9% year-over-year decrease, while the median for condos and townhouses was $315,000, a much steeper drop of 4.5%. This is where Governor DeSantis becomes a central figure. In a private meeting with industry leaders, he reportedly confirmed what many already suspected. The state is experiencing a confidence collapse, not just a market adjustment. Leaked notes from the meeting reveal his admission that Florida's rapid growth was poorly managed, with infrastructure failing to keep pace, insurance reforms being implemented too late, and building standards being neglected during the construction boom. He also disclosed a state projection that Florida stands to lose an additional 100,000 to 150,000 residents over the next 18 months if current trends hold. His private remarks, such as a warning of a decade-long recovery if insurance and HOA issues aren't resolved within a year, contrast sharply with his public statements that blame external factors. The tragic collapse of the Champlain Towers South in June 2021, which resulted in 98 deaths, prompted Florida to enact significant legislative reforms. Senate Bill 4D now mandates structural inspections and the establishment of substantial reserve funds for older buildings by the end of 2024. While the law was well-intentioned, its financial consequences for condo owners have been devastating. HOA fees have surged across the state, and many owners in older buildings are being hit with immediate special assessments ranging from $50,000 to $100,000 per unit. This has led to situations where residents' monthly fees have tripled overnight on top of tens of thousands in one-time payments. These rising costs, compounded by other fees like CDD charges in newer communities, have made the overall cost of ownership untenable for many prospective buyers. The current market dynamic is best described as a buyer's strike. It's not that buyers cannot afford the purchase price, but rather that they have lost all faith in the financial stability of ownership. They are hesitant to invest in a property that might require enormous special assessments, coupled with exorbitant insurance premiums and ever-increasing HOA fees. Trust in the system has been broken, and rebuilding that trust will be a lengthy process. Online real estate forums are filled with comments from potential buyers who are waiting for significant price drops or are completely deterred by the unpredictable carrying costs. This creates a self-perpetuating cycle. As more buyers wait on the sidelines, inventory accumulates, further spooking the market. This situation is distinct from 2008 because it is driven by a conscious choice from buyers to abstain from the market due to its insane cost structure, rather than a crisis of mortgage affordability. Looking ahead, there are specific signals that could indicate a market turnaround. These include inventory peaking and then declining for 3 consecutive months, the number of policies with Citizens Insurance continuing to drop, more private insurance carriers re-entering the Florida market, the quiet return of institutional investors, an uptick in migration numbers, and a decline in construction-related lawsuits. Some of these signals are already beginning to appear. More than 30 insurance companies have returned to Florida since 2023, and legislative reforms have successfully reduced litigation, which is starting to translate into cost savings for consumers and lower insurance rates in some regions. This suggests that while public perception remains negative, some of the underlying structural problems are being addressed, a fact that sophisticated investors are likely noticing. The bottom line is that many individuals are facing substantial financial losses on their Florida condo investments, a fact well documented in first-hand accounts online. The market is in a state of gridlock, with sellers either refusing to accept the new, lower price levels or letting their properties stagnate. Consequently, many experts believe the actual market damage is far worse than what official price data currently reflects, with declines in Southwest Florida potentially reaching 50%, rivaling the 2008 crash. The coming months will be crucial in determining the market's future direction.